At the Punch Card Investing meetup in Omaha, I had a really interesting discussion with quite a few people who had run their own businesses or were running their own business and also were spending a lot of time on their stock portfolio. And that was a big reason they were at the Berkshire event. Makes sense. But we got into a lot of discussions about the value of being a business owner and how it helps with investing, and how vice versa, being an investor helps a lot with running a business. And I want to talk more about those kind of two perspectives and how they really help one another, in that you can kind of lean on one to help with the other, and vice versa. That's because the general values are pretty similar, in that with business, you're trying to get to a greater financial position, a stronger position, to where you're less vulnerable to outside risks. And you could say a lot of the same things about investing. You're trying to grow your capital and get it to a higher level, or at least maintain it without putting yourself at too much risk. At least that's the general idea. You're leveraging your capital. In business, it's the same way. You're leveraging usually different types of capital. You're getting a lot more labor involved, maybe different equipment. Whereas with investing, it's money that's been invested into typically financial assets, but also into businesses, for example. Those stocks are stocks in businesses after all. So when it comes to investing, especially when you're picking individual stocks, you're ultimately investing in a business. And it's kind of hard to evaluate what a good business is, what problems a business might be facing, without having any business experience. So when we've actually run a business, or if you've been involved at sort of the management level of a business, you have a much different perspective than if you never had that, in that you're just when you're looking at a stock, for example, you're just looking at the financials usually, or maybe read some annual reports, but you don't have that extra perspective that you might have if you did run a business or had some sort of thing where you were managing people, because that's really what businesses are. It's equipment, people, money, and initiatives, I suppose. That's really how it all breaks down. So if you don't understand those elements, you're going to be at a disadvantage against those people who do. So that's where running a business can really help in the investing side of things, in that you have that sort of boots on the ground perspective that a lot of investors might not have, especially beginner investors who haven't had much time to run a business. I would put myself in that camp. I've only been running a proper business with employees for a little while, and I like to believe I know a lot of the fundamentals of running a business, but until you really put it into practice, it's kind of hard to say whether you're right. And even then, even if you have put it into practice, you got to see how it performs over the long term. So of course, education is a constant thing in any field, so you should be gaining more knowledge as time goes along, and that knowledge compounds, and it definitely applies to business, and it applies to investing as well. But right now I've been talking mostly about how business would help investing, but it helps the other way around too. When you have an investor's perspective, you look at the risks of a business differently too. In that, I see investing into financial assets, at least, it's a lot about balancing risk. And when you have that sort of risk analysis perspective, that's going to help you in your own business, because businesses take risks too. They have to deploy their finite amount of money in the most effective way possible. Or not really the finite amount of money, but the finite amount of resources, people, money, time. You want to make sure that's being allocated properly. And in the same way, that's what you're doing with investing. You're trying to allocate your assets in a way that makes sense for you and makes sense for the short, medium, long term, preferably leaning towards the long term, since the short term can be very volatile even if you do everything right. But in the long term, it's pretty tough to outperform unless you are doing things right. So that's where it kind of can help the other way around when you're running a business. If you have that investment perspective, it's really kind of a risk perspective that can be very helpful. Plus, some of the finer mechanics of running a business too. You might have some financial analysis in there that's very important, knowing how to read a balance sheet, knowing how to read an income statement, the cash flow statement, all that good stuff. It's really nice to have that sort of financial background as well, and you get a lot of that through investing. That's a bit easier to learn since it's a lot of kind of textbook items, and knowing the vocabulary and getting used to seeing it in action. And thankfully that's quite accessible with public stocks. But that's another thing that where investing can help on the business side. I found that really helped me when I was looking at all these private businesses before I ended up buying the one I did buy in this last year. And just having looked at balance sheets, having looked at different companies on the open market, on the public stock side of things, it made very much more comfortable to start looking at private businesses because a lot of the fundamentals are the same. The only difference is the stock doesn't trade publicly, and some of the information available might not be as easy to get, in that you have to. They might not have the same disclosure requirements as a public company, which typically has tons of disclosure requirements. So you get a lot of more documents immediately available online, for example, with a publicly traded company. Whereas with a privately traded company, you're going to have to typically ask some sort of broker or the owner themselves for that information, and you got to know what to ask for. So that can be a bit tricky, and you got to know what they actually have, because they probably might not even have a really solid, clean cash flow, income, or even balance sheet statements and documents. They might not even have those. So you should be pretty comfortable knowing how to take a look at whatever they do get you and kind of deciphering it through sort of investor's lens to figure out what you're actually getting. And a lot of that does come through investing and analyzing companies, analyzing deals on the public side. A lot of those same fundamentals do apply to the private side. And by private side, I just mean running your own business pretty much, or businesses that aren't publicly traded and don't have the same sort of disclosure requirements. So that's one way that the investor's perspective can definitely help on the business side as well. But overall, they really are two sides of the same coin. Because like I said kind of at the top, both really are the same sort of thing in principle, in that you're trying to maximize your capital. And your capital could be a number of things: labor, time, equipment, money, all that stuff we'll call capital, and you're just trying to allocate it efficiently. Same thing goes for investing. You're trying to allocate things efficiently for whatever your long-term goals are, or short-term or medium-term, depending on what your style is. But I think a lot of people would be best served if they're really looking towards the long term over the short and medium term, because that tends to come a lot more down to competence and temperament, I would say, compared to the short term and medium term, where a lot can really happen for a host of different reasons that are very much out of your control. Whereas the long term, you can do quite a bit to put your finger on the scale, I suppose. But that's a lot easier said than done, and it's tough to say whether you're doing things right until you've actually done them for a while. But I think overall, running a business is probably one of the best exercises for becoming a better investor. I think it does kind of skew more in that direction. Being a business owner helps more with being an investor than vice versa. Not that being an investor doesn't help being a business owner. But I do think just that the challenge of running a business tends to be quite a bit higher. But I think maybe it just depends on how you're wired. Some people are more wired to be kind of a more passive investor, and others are more wired to be an active business owner. So it kind of depends on where you're coming from. I guess I might be more wired to be an investor at this point, or just given my knowledge and competence. I think it's a little bit more uncomfortable being in the business owner's shoes, where you're running a team and you're dealing with emotions and you're dealing with challenges on a given day. That's something that I have to work on, because I haven't had too much experience with that to this point. I'm just trying to take things one day at a time, make sure that I'm doing things as best as I can. And I'm very confident in the long run that if I take the right lessons from it, of course, that should help me a bunch as an investor and as a business owner. Of course, I could keep doubling down on running businesses, whether it be bringing on more businesses into a larger portfolio in the future, or just doubling down on my existing business. Whatever it is, I think it's going to be a useful skill in a lot of things, just knowing how to run teams, knowing how to allocate. And then when it comes to looking at bigger investments in the future, back on the public stock side of things, real estate deals, whatever other financial assets there might be, I'll have that business owner's perspective that's a lot stronger and more useful, because I'll just have more experience at that point. Maybe the key takeaway here is just try to do something productive and try to learn, whether that be on the investing side, on the business side, or really just anything else. Any education, any perspective should be pretty helpful. Whether it's a negative perspective on something, you learn what not to do, or a great perspective on what probably works or what has worked in the past. Some of that can be very helpful, and when you can pull all those perspectives together, you should be in a much better spot when it comes to whatever you're doing, investing, business, anything. Just try to get educated, I guess. That's what I'm trying to do all the time, just trying to take lessons. And that's, I think, just with this weekend here in Omaha, and filming from Omaha right now, it was definitely a nice perspective, an eye-opener, is the term I'm looking for. A lot of people from all sorts of different backgrounds doing all sorts of cool things, but a lot of the fundamentals do kind of remain the same. It's a lot about being patient. It's a lot about being patient yet decisive, going for those opportunities that make sense, trying to really dive deep into whatever it is you're doing, and just being interested and curious in new things. That was a common theme with tons of people that I met here, and it was a really great time just for that alone. But with that said, before this video gets too long, thanks for watching. Be sure to subscribe so you don't miss future videos, and until next time.